Aye, it's Poku Banks, baby. Today we're going to be talking about the difference between investing and gambling. A lot of people get these things confused. People say, oh, you're day trading. Aren't you gambling your money? Or you're investing in stocks. Isn't that gambling? I'm here today to distinguish the differences between each. There's a big difference, trust me. So we can get into it in today's video. Let's get it. Now, I'm Poku Banks. I'm an entrepreneur and I love talking about personal finance, which is why I started a YouTube channel. Make sure you hit the subscribe button and like the video. Now, let's just start and go through the definitions of each of the three terms: gambling, betting, and investing. Now, gambling is to take a risky action in an unpredictable event in the hope of achieving a desired result. It is based on pure chance and a personal desire to win. Now, let's say, for example, the roulette wheel. You want it to be on red, but you don't know whether it's going to be on black or red. You want it to be on red, but we don't know. It's based on pure chance. Or simply a lottery ticket, This is based on pure chance. You don't know what numbers are going to come up. Again, this is a straight up gambling. It's based on pure chance with the personal desire for you to win. Now, betting, however, is placing a wager with a certain amount on a certain outcome with a bookmaker. It is the act of committing your money to be held pending an outcome. So this relates to sport betting, When you're betting on Man United to win, you're giving your bookmaker money, and if they win, then you get money back plus a return. If they lose, you lose all your money. Simple words. Now, when it comes to investing, this is the act of putting your money somewhere with the expectation of receiving a financial profit. This is where you can put it into financial schemes, shares, or property. This also requires you to do a lot of due diligence and research before making your investment. But now the difference between betting and investing is simply that when you put your money into a stock, you now become a part owner of that business. This is different to betting, where when you bet on a team, you don't become a part owner of the team. So when you're investing, you gain equity in the property or into the business. Okay, cool. Now let's move on to the laptop now, where I'm going to tell you where all of these investment schemes, so this could be gambling, it could be investing, it could be trading, whatever. I'm going to tell you where it lands on the level of risk. So whether one is too risky, one is a little bit less risky. I'm going to compare them all and explain the differences. So to begin with, cash. Cash is going to be the least riskiest one on this list right now. Why? Because you're putting your cash into like a savings account, into a bank. You get a little interest and it's pretty much guaranteed by the bank. Yes, don't get me wrong, the bank can default, so this is similar to what we saw with Northern Rock in the UK and the Lehman Brothers in the US. But do not get me wrong, this does not happen all the time. This has only happened once in 2008. If you have less than £85,000 saved in your bank account, then you are compensated and protected by the FCSC, so the Financial Compensation Services Scheme. So that's why I put this one as the less riskiest. So let's make this one a green color. Next, let's go for, I would say, bonds. Now, the reason I put bonds next after cash is simply because they are backed by the government. Now, government bonds, pretty much the reason why there's a little to no default risk is because, for example, the UK, if they really wanted to pay back your bonds, they'll just print off more money or raise taxes. So the UK's credit rating is actually AA. They are unlikely to default on your payment, on your bond payment. So there's little to no default risk. But then the only risk that you can see with bonds is simply the interest rate risk. So essentially, bonds and interest rates, they work inversely. So if interest rates rise, then the bond yield will go down. Why? Because people can take the money out and put their money elsewhere. That's the interest rate risk. Now, bonds will come second because, again, the amount of profit you can make from bonds, it's nothing crazy. It's pretty much not risk-free, but it depends on what country you're investing in. If you're in the UK, you're good. If you're in Greece, I don't know. So again, it happens. But bonds, I would say that's the next in terms of risk. And now moving on to the other side. Gambling. Gambling, let's put gambling over here. Let's make gambling red. Gambling is like the ultimate level of risk, as in you are risking your money away. Gambling, I don't know anyone that actually gambles professionally and they've made it to such a high level of cash. So like the billionaire status, You hear about all of these Gambazarians, all of that. It's all rubbish. Don't believe that. Gambling, casino, lottery, all of this is you're just pretty much basing it all down to luck. You're literally wanting to win, but you can't do anything in order to win. It doesn't matter how many times you play the wheel. It doesn't matter how many times you go to the slot machines. Look, it is based on pure chance. Like, the risk is too high. Like, you're just wasting money, in my opinion. You're wasting money for gambling. I don't think gambling is not the one, in my opinion. But we'll move on to more why gambling is actually used in all of the other investment schemes. We'll get onto that later. Next, the S&P 500. Now, I'll put this one in its own category because it's such a good thing to invest into. I definitely advise all of you lot to invest a little bit of your income into it, at least. Because I'm not going to say it's guaranteed money, but over the past 50 years, so since it's introduced 500 companies into S&P 500, from 1957 to 2018, there's been an average of 8% return per year. Now, again, in your own time, you can do the maths. Go on calculator.net/investment calculator. That is the best calculator you need to use to calculate your returns. Invest £250 a month. After 45 years, you'll be a millionaire. Bump it up more, £350 a month. After 40 years, you'll be a millionaire, and even more. And obviously, as we grow older, as our incomes rise, we'll be investing a lot more. So S&P 500 is a way to go personally. In terms of risk, it's low because, again, it's diversified. There's 500 companies within the index fund. So that means if one company is doing bad, another company may be doing well. The big guys like Charlie Munger, Warren Buffett, these guys recommend it. So if they recommend it, just listen to them, okay? I'm just passing on the message. S&P 500 is where, in my opinion, you get to the realm of investing. You can say bonds is investing, but some would like to say otherwise. But cash is simply saving your money. You're not investing. You're even losing money to inflation. So, but S&P 500, you are beating inflation and getting a return on your money. So, this is the realm of investing now, okay? Now, next, after that, I'll put ETFs. Now, ETFs are simply exchange-traded funds. It's basically, S&P 500 is an example of an ETF. There are ETFs for index funds. So, for example, VUSA, which is what I recommend you guys to invest into if you're in the UK or the EU. By the way, if you want to learn more about the S&P 500, do check my video over here or here. I'm not sure about easiest way to get wealthy. Now, ETFs, they are a basket of securities for a certain industry. So, for example, let's say you want to invest in, oil, for example, but you want to diversify yourself. You can invest into an oil ETF. So that means you're investing into, industry itself. So you're not investing into one individual stock. So you're diversifying your risk. You are investing into industry. If you believe the medical industry is going to rise, I'll invest into a medical ETF. One day I'm going to do like a whole portfolio video, so you guys will see that soon. So yeah, ETFs definitely, in terms of risk, obviously, compared to the S&P 500, this is the top 500 companies in America, This is as low as it can get in terms of risk. But when you're actually pickpocketing, industries, you're actually thinking, okay, cool, I think, the football industry or the gold industry will do well, then that's when you're actually picking an industry that may not do well in the future. That's where the risk starts to increase. But then the returns, they can be good. So yeah, ETFs will come next after that. Now let's go back to the other side with gambling. I would love to put the rest of cryptocurrency. I'm going to put this one in red as well. You'll understand what I mean by the rest of cryptocurrency later. But essentially, a lot of cryptocurrencies are, shitcoins, they are scams, they are money grabs, they are just the mimics of Bitcoin. They mimic Bitcoin. Literally, they have no other intrinsic value. They literally mimic Bitcoin and have a different name. I'm pretty sure you heard of Bitcoin Gold, Bitcoin Diamonds, Bitcoin. All these rubbish. All these weird names. And the rest of cryptocurrency, other than Bitcoin, Ethereum, and Ripple, in my opinion, if you invest in anything other than those, I personally believe you're literally gambling. It's next to gambling, in my opinion. If you disagree with me, don't dislike the video, comment down below. You can have a formal debate. But I personally believe that if you're investing into all these rubbish coins, you are literally gambling your money, because a lot of people are just doing this just for the money. As in they're creating these coins just to grab money off investors. These coins have no intrinsic value. Do you really think, coins like Cardano or all the others are actually going to, be something in the future? Do you really think so? I doubt it. If anything, Bitcoin, Ethereum, and Ripple are the only ones that have a space in our future, Bitcoin is actually considered an investment. You can even Google this. A lot of big names have spoken about Bitcoin. The Fed have mentioned Bitcoin. All JP Morgan, all these big banks have mentioned Bitcoin, and Bitcoin is now considered as an investment now, as an investment class. It's a digital investment. It's a digital currency. That's why I want to separate the rest of cryptocurrency and then Bitcoin and Ethereum and Ripple. That's what I personally believe. So Bitcoin, let me make this one an orange color. Now next, let's get individual stocks up in there. Individual stocks. I'm gonna make this one orange. So orange, cool. Now, individual stocks, this is simply, investing in Tesla, Amazon, like buying one individual stock. So just buying stocks, essentially, trying to beat the market itself. Obviously, in terms of risk, it's definitely higher, and then for the returns you can get are obviously a lot more higher. If you've seen Tesla over the past couple of months, since quarantine, you'll know what I'm talking about. But now, the difference between this and gambling now is simply, like I said, when you invest into an individual stock, you're now a part owner of that business. You now become a part owner of the business and you receive dividends. So this is, earnings from the profits. They give it to you because you invested in them. They take your money that you invested to invest into their own business, make more profits, and then they pay you for investing in the company. This is different to gambling and betting because you don't get any sort of dividends when you're betting on football teams and whatnot. If so, that'd be kind of lit, but you don't. Furthermore, when it comes to investing in individual stocks now, it is not a zero-sum game, okay? Now, essentially, when I invest in a stock and when it does well, all of the investors do well as well. We all gain wealth together. We all do well. Whereas, if I bet on Man United to win, that means if I win, someone else has to lose. Betting is a zero-sum game. One side wins, someone else loses. Simple. When it comes to investing now, I can put my money into a stock. All of us do well together. We all put money in, we all do well together. Okay, next. Now, this is the one everyone loves to talk about, day trading. Now, when I mention day trading, I'm talking, I'm talking Forex, I'm talking day trading stocks, trading options, trading futures, day trading. So essentially, you're investing in something with the expectation to close your trades within the same trading day or within, a few days or weeks. This is essentially when you have some sort of speculation in a market where you feel like it's going to go one way or the other. Now, let's be real, it is a lot more riskier than investing in individual stocks, in my opinion. But I do feel like it's closer towards the side of gambling. Is day trading investing? I wouldn't say so. I'll be real. I don't think day trading is investing. Yes, you're investing money into your trading account to make money from. Yes, that's an investment. You're putting capital into your trading account to make more money. Yes. But day trading in itself, is that investing? I feel like it moves more towards the side of gambling, in my opinion. That's what I personally believe. Bitcoin as well is a gamble. You also place a bet that you feel like the fiat system will come and crumble. It'll crumble down. That's what you're basically saying. You're basically saying, you know what? Just in case the fiat system crumbles down and we have nothing else to use to pay for stuff, I have Bitcoin. Bitcoin will now increase in value and I can use it to buy stuff. That's essentially what you're saying. But day trading, so Forex and whatnot, the amount of leverage you can use, I definitely believe it is closer to the side of gambling. Some people may hate me for that, but I'm just being real on it. Yes, you can invest cash into your account and then use it to make money, but is it really investing? Nah. Investing, I'd say, is individual stocks, ETFs, the S&P 500. That's more investing your money. You're not expecting to see your profits within a year. It's a long-term investment, 30 years plus. Day trading, look, you can make 100% within a few hours, okay? You know how crazy that is? Those type of returns? Yes, it's, the level of risk when it comes to day trading is a lot higher. It's a lot higher. Let's be real. But now, finally, sports betting, this is the only spot. The reason I say it's before the rest of cryptocurrency, simply because, with sports betting, you can still have an edge. You can do your research. Whereas with the rest of cryptocurrency, you're basically gambling on the fact that you may think that the people that own this coin will actually deliver what they promised, or it will actually come to something big. A lot of these are scams. A lot of these are pump and dumps. They give it a lot of hype. They pump it all the way to the top and then they sell off all the coins. Why? It's a money grab. It's not even regulated as much as you think, so they can do that. Whereas with sports betting, if someone that watches football in and out, Chelsea, for someone that watches Chelsea a lot, you can kind of gauge, what teams will do better. Sports betting. So that's why I put it before rest of cryptocurrency. I feel like that is a bigger gamble in my opinion. But this is my list, the level of risk. If you disagree, comment down below. Tell me where you would change things. This is where I personally feel like the risk is in terms of risking money and investing. There's a big difference between investing and then gambling. Okay, there's a big difference. But I'll be real, day trading, it does move towards the side of gambling, but then there's a little bit of investing inside. So essentially, with day trading, it's like you're using an investment product, so Forex market, stock market, but then you add an element of gambling into it, and then you can use it to make a lot of money. Do you get what I mean? So it's a mix of both, but I do definitely believe that it does lean a little bit towards the gambling industry. Don't get me wrong, just because it doesn't mean I'm going to stop. I still trade Forex, why not? Money's being made. But anyways, that's for another video that'll come out soon. Hey, and also, just before I go, I would love to say that just because this is my list, it doesn't mean you can't gamble over here. So for example, individual stocks, it is seen as investing, but then people can make it gambling. Why? Because some people, for example, if you invested in Tesla just because you thought, it looked good and it will keep going up, that is gambling. I'm sorry, but that is gambling. If you invest in Tesla just because, you thought it would keep increasing the price, that's gambling, okay? But whereas if someone who understands Bitcoin, has been following Bitcoin, understands how it works and actually uses it and invests in Bitcoin, then that could be seen more as an actual investment. Do you get what I mean? So all of these can be, you know, it's even with the rest of cryptocurrency. If you personally believe that Litecoin is an investment, if you know it inside down and you've done your research, then yes, that is an investment. You know, it's not really gambling because you've done your research into it. But most people, I'm just saying, most people will just throw their money into it because they think it'll go up. Okay, that's when you're gambling your money away. And I'll be real, you know, a lot of people made a lot of money off Tesla, and I personally believe a lot of them were gambling. You know, they didn't actually do their research in the company, because if you didn't know, Tesla's actually making a big loss. But yes, this is my investing spectrum. This is what I personally believe. Again, comment down any more video ideas below. I hope you guys enjoy that, man. Alright, it's Poku Banks, baby.